Hello folks, I'm LA Little and this is your nightly TA Rep, where we take a look at these markets and we do it from a neoclassical perspective. Each day we ask ourselves just one question: what happened today and what does it tell us about the coming days? We do a show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel LA Little. And you can subscribe to it there and stay up to date with what we're doing. As far as these markets, it was another down day. It was red across the board. It was down quite a bit more at one point, about 1%. End up about 0.5% lower on the S&Ps, the Dow, 1/3%, and down to 1/4% on the technology stocks in the Russell. If we look elsewhere, pretty much green across the board, in particular in the energy sector and the dollar. The dollar is breaking out again, folks, and I'm not sure that's a good thing. Elsewhere, gold, silver, down, not much else to say about things. If we take a look at the actual market and how it fared today, let's pop over there. It was a doji reversals again today. We've had almost every day now these markets pushing down. It was, if you just go back the last week and a half, right? It was, what is this, February 25th. So you make the big run, get to the top, you open, trade down, that one closes back up. Next time you trade all the way down, you close back up. Next time you trade down, you stay down. Then you get the pop up on Monday. Then you gap down, trade down, close back up. Well, you're down on the day, but you close higher than the low. Today, exact same thing. So of the last, 6 days here, 5 of them have traded down off the open. And it's kind of become the pattern. It was kind of exacerbated yesterday and today. But each day, the buyers just kind of start inching in as that happens, right? And they start working it back the other way. If we look at the breakout bar, here on the S&P, it was on the February 13th. That was when it broke over the swing point high. The volume's there about 35.2. You're coming back with 34.2. So you don't have the volume. It's close. Yeah, I can test some more, but it just doesn't look like it wants to break. If we go to the NASDAQ, now the NASDAQ, it actually came down, and it's actually cleaner on the NDX. Let's look at that one first. On the NDX, you actually come down. There's kind of a little ledge down here, right? Trades up underneath that ledge. The volume yesterday was about 20. Remember, it was a little heavier yesterday. Said it probably would try to test again. Well, it did. 20.1. Now you got 18.2. So you get under it, back over it. A little doji. But this thing's going to try to flip around and head back up again. And that NASDAQ we were just looking at looks about the same way. If we flip over the Russell, here we go on the Russell, you actually have a little bit more volume. Breakout bar here doing about, what is that, 352, coming back with 342. So just like the S&P 500, you don't have the volume on the move. If we switch over to, I want to switch over to the AUX markets and take a look at the dollar, because the dollar is probably the tough spot here, because as the dollar starts to sky on up, right, that's before we already know that the last time, well, actually, let's just pull the weekly over. The last time we did this, right, we came off the June, July lows, made a run up, and that really didn't do anything because that was off the bottom. Congested a little bit and then makes another run up. And if you remember, as it started that next run up is when we got hit. It was in September. Well, actually that we got hit on that run up, that first run up. Then we make the next run up, and then we kind of get hit up here at the top. In the June, what is it, January time frame, as this thing was skying back up again. And then the earnings and all that. Remember, January wasn't that good. Then you got the big spike up in February as this thing went sideways. Well, here we go again. We're taking off again. If this continues to take off, right, if this doesn't get reeled back in, I think it's going to be hard on the market. You know, it's like a rate hike, right? Essentially, the dollar costs more, and that makes everything worth less. Well, I don't know if I said that quite correctly, but you know, if the dollar is more expensive, right, then those things it buys, you know, like stocks, for example, um, you know, it's not the same story as it was when the dollar was cheaper. You know, stocks, it takes more dollars to buy stocks when they're cheaper than it does when they're more expensive. So that's, you know, kind of the scenario. It also hurts the earnings, although that won't be felt for another 6 weeks or so. But if we start rising, they'll start pricing that in because that was the case in this last earnings season. So anyway, you know, not to beat a dead horse here, but the dollar is going to be an issue if it continues up. Bonds tried to lift today, couldn't. They're down here. They're going to try to test that low and try to break it, make an ABCD structure on the downside. That augurs for better equity prices. The dollar against it. Over in Europe, big reversal right at the end of the day. They spike back up. You got the ECB, the BOE tomorrow. In Asia, Hong Kong's still having a hard time, as is China. They both sold off pretty decent the last few days. Looking back here on the ox market, the gold market, just coming back down as the dollar keeps going up. And if we look at the silver market, it's the same story. We've got silver doing the same thing. And so in all these cases, right, it looks like the market wants to go higher. You know, at the same time, this dollar could become, you know, kind of a spoiler for the rise. Sector-wise, let's pop into the sectors here. If I look at the sectors real quick, you know, it actually wasn't bad action in the sectors, just like the indexes. The SOX, you know, was selling off hard, and then it reverses and closes up with a nice doji. Kind of a hammer reversal on it, if you will, although it didn't get back over anything. If I look at the financials, you know, the financials were down pretty big. They had these stress test results. But, you know, they're kind of holding in this range still. It's still in the same sort of range. If we look at some of the others that were doing retest regenerates on the bullish side, like the XLI, that low on the swing point highs bar is 57.07. You get up underneath it today, you close over it. You got less volume. I guess actually it's not less volume there. It's certainly less volume than the breakout bar though. If I look at the, let's see, what was another one doing that? XLV was coming back. I don't know if the XLV actually tested back in. I didn't quite make it, but the XLV did a nice reversal as well. IYT was also doing a bullish retest regenerate. And so, you know, if I look at that one comes back in, is still trying to reverse, gets back over yesterday, about the same volume. So, you know, sector-wise, they didn't look bad today. I mean, they don't look great, but they don't look bad. And the IBB is still hanging up here at the highs. It's not giving it up. So, I don't see anything in the sectors that tells different. Overseas markets, they don't look any different. They just pull back and then, you know, a little bit of a spike today in Europe, not so much in Asia. Our markets is really consolidating in working off, you know, this big move in terms of price more so than time. So if I just pull this up one more time and look at it, you know, if you look at this doesn't look bad. I mean, you know, this is the worst looking one. Comes back in, test into that swing point high again. Volume's not any bigger than it was on the way up. It looks like it's going to consolidate up here after a nice big move. Now the risk certainly is for this market to roll back over, and that's possible. I mean, anything's possible, but when you look at these various signs from the indexes themselves and from the sectors themselves, it just looks like this market's probably going to hang in here. You know, folks, I've had a very long day. I'm going to probably call it short here. I don't have any viewer questions tonight, and I've pretty much given you the synopsis already. You got ECB in the morning. I think that's going to be the big story. What do they do? Is there anything out of that in terms of an effect on us? There's some more economic news and then some more data tomorrow with the employment numbers. Right now, consolidation, more so on time than price. If it continues that way, I think that augurs well as we move forward. I'll leave it at that. Thanks for joining me. Have a great one. Take care. Good night.